Hello students. Today we'll learn about the golden rules of debit and credit. So uh, in the next lecture we'll be learning about the journal entries. That time you will have to remember these golden rules. Okay, without these golden rules you'll not be able to post your journal entries and not accurately. Okay, now these golden rules, there are three golden rules. Okay, so in the last lecture we had learned about the classification of accounts, that is personal account, real account and nominal account. Yes, so each account has a rule. Okay, so any account you see, for example, like if you get a personal account, then personal account has a separate rule. Okay, so when we will debit, when you will credit, that you have to keep in mind. Now golden rules we are going to learn it as per the traditional approach. Modern approach we are not learning as for now. Before that, I like to tell you all that every transaction has two aspects and two accounts. So what are the accounts? Like the personal account and real account and nominal account. So any two accounts will be there. It can be like same accounts. Both the accounts in the debit and credit, both the accounts can be personal accounts, or both the accounts can be real account, or both the accounts can be nominal account as well. Okay, or combination you can have. Okay, it depends on the type of transaction that we are learning. Now what are aspects? Aspects are basically how the transaction is affecting the accounts. Okay, so whether the person is the receiver, whether the person is the giver, or whether the money or whatever asset is coming in the business, or it's going out of the business, or it's an expense, it's an income. It depends on the type of transaction. Okay, so how does this uh, receiving or giving or coming in, going out, or expense or income, how is this affecting those two accounts is known as the aspect. Okay, so based on this we'll be learning the golden rules. Now the golden rule, first one is personal account. So personal account has the rule of debit the receiver, credit the giver. Now in the previous lecture we had learned that the personal account is an individual account or a group of individual accounts, say Ramesh account, Sneha account, or we can say an organization's name. Okay, so that organization's name can also be a personal account, say for example SBI bank account. Okay, so it's an organization, right? Or say your college name. Okay, so uh, your college name, your organization name, Tata account, or um, what you can say, Reliance account. All those types are personal accounts, right? So the rule for that says debit the receiver, credit the giver. Now if I am receiving the money, like for example, say somebody gave me money. Okay, say for example my mom gave me 100 rupees. So my mom is the giver, I am the receiver, barabar. So my account will be debited. Okay, and my mother's account will be credited. So Anandita's account debit to Anandita's mother's account. Like that we'll write. Okay, so I am the receiver, my account will be debited. My mother is the giver, her account will be credited. You're getting it? Now the second one is real account. Real account golden rule is debit what comes in, credit what goes out. Okay, so real account, what we learned was those are the assets that the business owns. Say for example, I have a business, my business owns a building, my business owns a factory, my business owns a machinery. So those are the real accounts. Remember? Now this golden rule is debit what comes in, credit what goes out. For example, now say if I am receiving the money, okay, same example we'll take. My mother gave me 100 rupees. So what is coming in? cash is coming in, right? That 100 rupees she is giving me in cash. So 100 rupees is coming in. So cash account will be debited. Okay. And in my mother's case, cash is going out, right? If it was my mother's business and if my mother was supposed to record the transaction, then in her case, cash is going out of the business. So in her case, cash account will be credited. Getting it? So in my case, cash account debit. In my mother's case, cash account will be credited. That is to cash account. Now nominal account. Nominal account says debit all expenses and losses, credit all incomes and gains. Okay. So what are the expenses? For example, I am paying my electricity bill. Okay. And those are expenses for me, right? Okay, so in my case, in my business, when I am recording the journal entry, electricity bill will be debited. So electricity bill debit. And in case of Mahavitran, that electricity bill will be credited. Okay, why? Because it is their income, right? So in my case, electricity account debit. In electricity bill, the Mahavitran case, to electricity bill. Okay. So once again we'll revise this. Personal account, debit the receiver, credit the giver. I am receiving the money, my account will be debited. My mother is giving the money, her account will be credited. Real account, in my case, cash account will be debited. In my mother's case, cash account will be credited. And in nominal account, if we are taking in consideration nominal account, then electricity bill will take, in my case, electricity bill account will be debited. In Mahavitran's case, electricity bill account will be credited. Now we'll see some examples like how to classify this. Okay, so how to identify which account we are considering, which aspect we are considering, which golden rule we will be following, we'll see that. For this I have 5 transactions. Okay, so commenced business with cash rupees 20,000. Commenced in the sense I am starting my business. Okay, my newly established business. Second transaction is purchased goods on credit from Ajay. Third one is cash sales, received commission, and then last is paid rent. Now in the first case, okay, first case is commenced business with cash, 20,000. So in that case, your two aspects is cash comes in. Okay, so if I'm starting the business, cash is coming in the business, I will use that cash to do all my transactions, business transactions, to run my business. So cash is coming in, and proprietor, that is me, that is a capital, is going out of the business. Okay, that capital is basically getting converted into cash. So capital is going out. Okay, so these are the two aspects. Okay, in the first transaction. So which will be the accounts? Cash account and capital account. Now you just have to classify this. Cash account is a real account because it's an asset for my business, right? I am owning cash. And capital account is my personal account because I am the proprietor, right? My money, that was my personal money, it got converted into business's assets. Okay, so my personal money, that is the capital, will be personal account, right? So in this case, the two rules that we'll be following are the real account, debit what comes in, credit what goes out, and your capital account will be credited. Okay, so here your golden rule will be debit the receiver, credit the giver. Okay, Journal entries will learn in the next lecture. Okay, for now just take into consideration what are the two aspects that we'll be considering, what are the two accounts, and how will you classify them. So that classification basically will tell you all which golden rule you have to follow. This was the first example that we learned. Cash is coming in the business, okay, and my personal money is going out. Okay, my personal money got converted, so my personal money is going out. What is coming in? Coming in the business, cash is coming in. Okay, just keep in mind, take it slow. Okay, if you are not understanding, just rewind the video, and still if you are not understanding, you can ask me in the comment section. Okay, now the second example is purchased goods on credit from Ajay, rupees 10,000. Okay, for now just ignore the amounts. Uh, Keep the words in your mind. Okay, purchased goods on credit from Ajay. On credit means I have not paid the money yet. Barabar? From whom did I purchase it? So Ajay. And what is coming in the business? It is the goods that is coming in the business. Okay, my money is still not out, so uh, you have to keep that in mind. Okay, it's on credit that is written, so I have not paid the money. Okay, so what is happening here? Purchases. I am purchasing the goods, that is my expense, and since I have not paid the money, nothing will be credited. Okay, so we are taking in consideration Ajay. Ajay is the giver. He from him I purchased the goods, so he is the giver, right? From his business, goods are coming out, uh, going out, and in my business, goods are coming. You understanding? So purchases is an expense. Ajay is the giver. Purchases is an expense, that is the nominal account. Ajay is the giver. Ajay is a personal account. So in this case, your two accounts that will be considered are purchases account, okay, and Ajay account. What are the two aspects? Purchases is an expense. Ajay is a giver. Nominal account rule you are going to follow: debit all expenses and losses, credit all incomes and gains. Personal account, debit the uh, receiver, credit the giver. Now third one, cash sales. Okay. So in the second example, purchase goods on credit from Ajay, we had not paid the money. Okay, and therefore the name of the seller, that is Ajay, was given. Now here it is clearly written cash sales, that is I sold my goods and I have been immediately paid the cash. Okay, so this is clear. Your sales is the one of the aspects, and cash is one of the aspects. Okay, sorry, cash coming in is one of the aspects. So which are the two accounts? Cash account is one of the accounts, and sales account is one of the accounts. So cash is coming in the business. I'm selling the goods, right? So cash will come in the business, and my sales is an income, therefore. So uh, cash is coming in, cash is my asset, therefore it is a real account. Sales is an income, it is a nominal account. Okay, real account rule says debit what comes in, credit what goes out. Nominal account says debit all expenses and losses, credit all incomes and gains. This was the third example. Then fourth one is received commission. Okay, so received commission, that is it's an income. Commission is an income, right? So I am receiving something, commission is an income, cash is coming in. Now commission will not come alone, like no, I will receive it in some form, that is here the form is cash. Okay, so cash is coming in the business and commission is being paid. So commission is an income, cash is coming in. Cash is an asset, real account. Commission is an income, nominal account. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. Okay, I hope you all are understanding. Please rewind the video if not understanding, and you can ask me in the comment section. Okay, I'm repeating again. And the last example we'll see is paid rent. Now, in the fourth example, what we did, received commission was an income and cash was coming in. Here, this is exactly opposite. Rent is an expense because we are paying the money. Okay, and in what form we'll pay? We'll pay that rent in the form of cash. So, cash is going out of the business and rent is an expense. So, uh, in the fourth example, real account was debited. In the same example, nominal account was credited. Okay, this will be exactly opposite now. Okay, nominal account will be debited, real account will be credited. Okay, rent is an expense. Expense means nominal account, and cash goes out of the business, that is it's a real account. Okay, and therefore it is credited. Okay, it's going out of the business. Debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. So I hope you all have understood this video, whatever I said. If not understood, I am repeating again. Please rewind the video and watch the video again. Okay, and uh, if you don't understand still, then you can ask me in the comment section. So thanks for watching the video. Please like, share and subscribe.